All right, well, the Christmas rally that everyone thought we were going to be getting may not be happening. The Dow lost that key 12,000 level last week, as well as dropped below its 200-day moving average. And going into this week, there are a lot of questions in the marketplace. In today's weekly outlook, we're going to be looking at what's going to be happening in Europe this week, as well as some of the key data points we have, and can we actually get this Christmas rally going before Christmas actually happens. As we all know, the market has been under the pressures of Europe over the last few weeks, and coming forward into this week, the Christmas rally that everybody's been looking for is definitely going to be, again, on the hands of Europe. Last Friday, we got the Italian confidence vote, and that was very key to the market on Friday, and I think that was bode well for the market. But we weren't able to sustain a rally throughout the day, and so that sort of news piece, I think, has already gone by the wayside. So this week, the big moment is going to be ECB President Mario Draghi. He's going to be talking to the European Parliament on Monday, and the kind of comments that he can have, whether positive or negative, will definitely shape, I think, how we start out the week and probably linger throughout the rest of the week. Another key point for Europe is going to be the Euro finance ministers this week are expected on Monday to put together the measures in order to get the $200 billion Euro loan from the IMF. Now, it isn't expected that they're going to be able to get those measures together, and I think that the fact that they won't get those measures together and that loan won't come through as expected is going to weigh on the market. However, if they are able to get those measures together, that's going to be very bullish for the market, and I think that will provide a nice catalyst for the market moving forward this week. Another thing to watch is the credit agencies. The S&P, Fitch, Moody's, they've all over the last few weeks put the AAA credit rated countries from Europe on watch, and at any point in time they could downgrade one of those countries. If they do downgrade one of those countries, it's going to be catastrophic to the market this week. I don't think anything will happen this week. Basically we've got these companies watching these countries, but I think that they'll probably do most of those reviews after the beginning of the year. They have 90 days within putting those countries on watch in order to make a decision. And my guess is with Christmas and the holiday season, a lot of those decisions won't be made until after the beginning of the year. Finally, the other key thing to watch in Europe is the yields. The bond yields, where they go. Italy, that key level is 7%, and we dropped below that 7% level late last week, and I thought that was going to provide a nice catalyst for the market, and it wasn't taken as much as it should have been. I think if they stay below 7% this week, it does put a nice floor on the market. They go above 7% again, and I think that's going to create another concern for the market, and it's going to give us another chance to sell off. Going into this week, Europe is definitely, we have to be cautious with Europe. There's a lot of different factors that could bring us down. At the same time, there are surprises that can happen. Does Draghi say something good? Do the Euro finance ministers get something together? Will the yields stay below 7%? So there's definitely, Europe is on watch, and whatever happens there, I think will really be crucial to how the market moves this week. Taking a back seat to Europe is going to be the data from the USA this week. We do have some key data points coming out this week, but I'm not sure that there are enough to battle what is going to be coming out of Europe. We're going to start out with Tuesday with housing starts and building permits. Housing starts have really started to make an upswing over the last couple of months, and housing has seemed to sort of come off that bottom and is slowly creeping up. It's nothing that we can start to get excited about, but if that trend continues, I think that that's something that in 2012 can be really good for the market. For this week, if those housing starts are better than expected, I think that's a bullish point that can help bring the market up. Also on Thursday, we're going to get jobless claims. Last week we had a dramatic drop to 366,000 on initial employment claims. Now a lot of people were saying that was a seasonal drop, and if we could continue to see a number below 380,000, below 400,000, I think that will be very good for the market. I think a number coming in above 366,000 will be bad for the market on that given day, but if the general trend continues below 380,000, I think that's very good. And then on Friday we're going to be getting personal income, personal spending, as well as new home sales. And that personal income and personal spending data point I think is very important to the market. Right here at this Christmas season, and if we really want to get that Christmas rally going, we want to see how's that personal spending coming in. Are people spending that money? This data will be coming in for November, so we'll be getting that Black Friday personal spending data. And if that goes up, I think that's going to also bode well for the market at the end of the week. I do think that the data does take a back seat to Europe throughout the week, but if the data is strong, I think it can battle with Europe, and I think that we can see some rallying coming off of good data points. Although it is an earnings season, we do have some key earnings coming out this week that can move the market. On Tuesday, we're going to be getting earnings from Carnival Cruise Line, Nike, and Oracle. So we're going to be getting one from each sort of sector of the economy. We'll be getting a tech, we'll be getting a consumer staple, and we'll also be getting some discretionary spending. I think Carnival is actually, out of the three, the one that I'm most excited to see. How is Carnival dealing with rising oil prices, and at the same time, are people spending money to travel? I think that will be a very key point for us to see. Nike and Oracle, I think, are also very important. Nike, what are they doing in China? How are the emerging markets coming into play there? And Oracle is always extremely important to the tech industry. On Wednesday, we'll be getting earnings from Walgreens and Bed Bath & Beyond. Again, we're going sort of the consumer side of things, but I think that, again, these are important earnings that do have an impact on the market. Walgreens especially. This is a huge company in the USA. How are they doing with consumer spending? If we can see spending really strong this week, we have a lot of chances to see that sort of information coming through in different ways. And if Walgreens shows consumer spending is positive, I think that bodes well for the market. Bed Bath & Beyond, I know a smaller name, but again, another chance for us to see how is that consumer spending coming in. If I see these kind of numbers coming out well with Walgreens, with Bed Bath & Beyond, Nike, Carnival, personal spending, personal income, I'm definitely going to think that this is an economy that is back on its feet. We've got people spending money, those employment numbers are coming down, and I think I'm excited about the prospects for 2012. But we do need to see how those data points come in on those different areas. Well, what we'd like to do now is take a look at some of the plays that we made last week, some of the ideas that we have for the week going forward, and we'd also like to take a look at some of the upgrades and downgrades that we made this past week on our equity analytics department. First trade we'd like to look at is Research in Motion. This was traded in our earnings alpha portfolio. Our earnings alpha portfolio uses options and equity to do trades that are either going with companies that are going into earnings or out of earnings. And with Research in Motion, we knew that there was going to be a lot of volatility post earnings, and so what we were able to do is do a reverse iron condor. With the reverse iron condor, you buy a bear put spread, so you're looking for downside movement, or you buy a bull call spread, and you're looking for upside movement. We knew that there was going to be either a lot of upside movement or a lot of downside movement, but we weren't really sure. We were suspecting it was going to be downside, but if Research in Motion had come out and said anything bullish at all, this stock would have popped excessively. So what we were able to do is we bought the 15 and 16 bull call spread and the 15-14 bear put spread. And in that way, if the stock moved lower than 15 or higher than 15 by a certain break-even point, we would make money. And our break-even points were 14.71, 14.40 and 15.60. And the stock went to about 13.30. We were able to pull off a 19% overnight gain on this trade. And you can do these kinds of trades with reverse iron condors on any company that's coming into earnings and has options that are expiring, or you're willing to take your gains off the next day. But what you're going to need is a lot of volatility. So you're looking for companies with high beta or companies that have a lot riding into their earnings. Another trade that we performed, this was in our short-term equity portfolio, is we bought SCO. Now, SCO, I think, is the top ETF, along with its counterpart UCO from ProShares, the ultra and ultra short Dow Jones UBS crude oil. This is the best ETF to follow the crude oil. What we did was we bought SCO on Tuesday. Going into inventories, I was not bullish on oil at all. I didn't see the market as being bullish, and I also thought that commodities were heavily overvalued compared to how poorly the market was performing. So what we were able to do is we picked up a little bit of SCO, and we were able to make a nice 7% gain on that ETF, just trading the ETF straight up. We also looked at the SPY 2 Fridays ago, so not this past Friday, but the Friday before that. We looked at the December 17th options, and what we wanted to do was we wanted to buy a bull put spread. And so a bull put spread is basically saying, okay, I'm not sure exactly where this stock or where this ETF is going to go, but I know that it won't go to this level. And I thought the 119 level was the key level where the SPY would not go. Even if we did have a down week, we were trading at 125 to start the week up. It was going to take a lot to break through that price channel, as you see, that comes up to 120, as well as those 20 and 50-day moving averages. And so we sold the 119, 118 bull put spreads. So we sold the 119 and bought the 118 put. And the spread cost 12 cents. We got that premium right away. And as long as the spread expired worthless on Friday, we would make all that premium. And the SPY never went to 119. We made the entire premium, and we made a 13.5% gain on that spread. And this is just another one of the many trades that we performed throughout the week, but I just want to give you a little snapshot of some of the ideas that we had for this past week. Also, speaking about the SPY, another one of our traders Giorgio Ferrero. He operates the Giorgio's Corner portfolio. He actually bought a bull call spread on the SPY this past week, and this was based on some analysis that he had done. That he saw that over the last 10 years, there's only been twice from the November to January options period that the SPY has decreased in value, and so he bought some January calls, and he's thinking that the SPY will move up through the end of December and into the beginning of January. In our dollar and cents portfolio, which is operated by our lead researcher there, Mike Mackin, he found that looked at some earnings information for this coming week on Carnival Corporation as well as Nike. And for Carnival, he found that over the last 12 years, they've only had one significant loss in their December earnings period. And that significant loss was of 11%. However, at the same time, they had averaged pretty excessive gains because they've had three gains of 21%, 32%, and 36%. And that's an overnight gain. That's not just a gain from one day or for the entire month. And those overnight gains were pretty substantial, and so he actually sold some puts on them, and in our own earnings alpha portfolio, we bought some calls at the end of the week going into their earnings for next week. He also did some research on Nike and found that in December, over the last 10 years, the largest drop they've ever had is 3%. On Friday, the stock closed down about 2%, and so based on historical analysis, this is probably about as low as Nike's going to get for the month. They have earnings coming out next week, so obviously if those are pretty poor, then that might buck that trend. But based on historical analysis, we saw that Nike is pretty cheap right now and went ahead and sold the 85, 82, 50 put spread for the January expiration. Finally, I'd like to take a look at some of the technical levels on the market going into next week that can kind of give us a snapshot of what to expect. If we look at the Dow Jones, we did break on the Dow Jones Industrial Average right below the 200-day moving average on Friday. Now, I think if we can retake that, that's going to provide a nice floor throughout the rest of the week. And we also have that 50-day moving average, as you can see, right below 118 as well. That's also creating a floor for us right now. A lot of weak news and a breakthrough of those two levels on Monday would probably create a situation where we could be looking at maybe moving to 115 if that sort of trend continues. However, at the same time, I think that if we can hold those levels and get some bullish news, we can pop right back up to 120 and then try and move to 125 in no time. Some stocks that I'm looking at for next week that I'm interested in. Google on the bullish side. I think that this stock, as you can see, is primed right around the 620 line. It's been consolidating right around that line, and I think that it's ready to break out. It needs the market's help probably a little bit, but we had a really nice Friday from the stock, and it hasn't shown much downside. And I actually sold the 600 puts on Friday because I think that this stock has a lot of potential moving forward. Finally, the stock that I would be looking at for more downside for next week is probably Cablevision Systems. They got a downgrade from Merrill Lynch on Friday. They've lost their CEO. I think that this stock probably, it was already in a pretty bad downtrend, had a break out to the downside. It's got nothing stopping it from moving down farther, and I would look for this stock to probably continue to see some weakness moving forward. I think it's safe to maybe sell a bear call spread on top, or even short the stock on any weakness in the market. Finally, from our equity analytics department, we did a lot of upgrades and downgrades each week. We cover over about 120 companies in that area. One of the stocks we cover is Wendy's, and I upgraded this company to a buy and up my price target from $6.50 to $7 on Thursday. And I think that Wendy's is a company that looks really solid moving forward. They've got a really nice plan in place for this sort of barbell pricing pattern where they're going to try and have a lot of stuff on the low end, a lot of stuff on the high end, and a little bit in the middle. They just introduced their new W Burger, and the company seems to have a real vision for how to get back out of the sort of trend that they've been over the last few years where they've sort of taken a backseat to McDonald's and Yum Brands. And I do believe in the sort of some of the plans that they have for that company, and I look for them to have a lot of upside in 2012. Well, thank you for joining us for our weekly outlook here at the Oxen Group. If you have time, please check us out on the web at www.theoxengroup.com. You can sign up for a free 14-day trial today. Join us for 70% accuracy and over 100% gains for the past 3 years.